What if I told you glitzy promises of mutual fund ads are not a crystal ball to your future? Yes, we are going to discuss more about safe harbor statements that mutual funds issue while they give out schemes. And learning about them could be the key to your investing success. Wait till the end as we decode this aspect. What is safe harbor statement? Safe harbor statement is nothing but a statement that a mutual fund house releases whenever they run an ad or they distribute a brochure or do any product promotion of their investment products. The safe harbor statement merely states that the past performance is not guaranteed in the future. Now, as an investor, many of us are tempted to buy mutual funds or invest in a particular scheme based on how the past performance of that scheme is. But the safe harbor statement essentially is a statement that helps the mutual fund stay clear that, see, I already told you that don't just go by past performance. So in some sense, it's meant to kind of clear their name from that perspective. Now, examples could be that there are schemes which have delivered 20% return in the last 1 year. But when the scheme is advertised in any media, say television or print media, it will always come with the line below that says, past performance is not guarantee for future returns. Please read the offer document carefully before investing. Now, this is a typical safe harbor statement, disclaimer as you would more simply call it. This is a very important aspect of investments that happens, primarily because the mutual fund houses don't want to take responsibility for future returns. And it's quite rightly so, because future returns depends on a variety of different factors. Markets change, economies change, government policies change, regulations change. All of these will impact your future performance. So it's extremely important that one understands what these safe harbor statements are. Another safe harbor statement could be the name of the fund is no guarantee for the outcome of the fund. Typically, you would find that there are funds which will have the word growth in it. So typically, you would have growth or profit or words that are sounding very, very profitable to you, but does not necessarily mean that the scheme performance will also be in line with the name of the fund. So it's extremely important for a lay investor to understand that the name of the scheme and the performance of the scheme are two very, very different things. So you could have a safe harbor statement saying that the name of the scheme does not guarantee the performance of the scheme. Please read the offer documents more carefully. So this is again one more variety of safe harbor statements. In all these cases, the fund house will urge you to read the offer document carefully and then invest. It's important because lay investors go with only the past experience. Now, while in many cases that can work, in the investment world, especially in mutual funds, past is not equal to future. There are a lot of variables at play and they can change at all points in time. So one needs to be vigilant, and then after reading and understanding the risks involved, take investments that suit their temperament. That's why understanding safe harbor statements are very, very important before you invest.